This is maple syrup. We are here to show you the life of Canadian immigrant, the daily struggle, lifestyle, and how we adapt to Canadian culture. And you can decide if you should immigrate to Canada. Hey guys, Jim here. And this is a disclaimer. If you want to learn how to get paid from Canadian government with your hard-earned tax money, watch the video till the end. However, if you're short for time, we did put a timestamp down in the comment below, and each of the topic we discuss in the video. Now, keep in mind guys, if you like our content, subscribe and hit that like button so we can keep creating this kind of content. Now, if you guys want to let us know what you thought, put it in the comment below and tell us what you want to see next. And let's get to the video. Hey guys, welcome back to Maple Syrup. This is Jim. So today we have an interesting topic, tax. The most boring but the most important topic if you're moving to Canada, because we're kind of known for our high tax. So today we're going to explain a little bit why the tax is so expensive here. Now, if you're a new immigrant here, what should you know when you first come to Canada, right? If you're coming as a student, you're coming as a worker, or you came here, you were a worker and now you're permanent resident and now you're self-employed, what should you know? We're gonna cover the general. We're just gonna touch it. We're not gonna dive in deep because this is a very broad topic. Now, today we have a special guest coming. My friend here, Chris, you.
Hey Jim.
What's up, man? How's it been?
Nice to see you.
Yeah, nice to see you. You look a little bit taller, man.
Oh yeah, I guess I grew a bit. And my belly too.
How's COVID treating you?
You know, it's I guess it's okay because, you know, I'm lucky to be able to work for most of the time. But you know, I haven't really gotten a haircut in a few months, and I get really lazy with the shaving, so yeah,
COVID,
that,
guys.
but you know, I'm still alive and well. How about yourself?
Yeah, not too bad, you know how it is. So Chris is a tax specialist. Chris have a degree in tax.
Or accounting.
Accounting, right? Obviously, a degree in accounting. And he specialized in small business, self-employed. And he was doing my tax for majority of the time I was in Alberta. I know he helped a lot of small company, expert in terms of getting your tax done. If you're self-employed, if you're a small business and you're looking for someone, bookkeeping, right? Chris is an expert in that department. So today, Chris is going to be explaining to you guys how tax works in Canada and what do you guys need to know when you first got here, because we're kind of immigrants here, right? So we've been through it. Especially Chris know exactly what you have to do. So today we're going to touch upon that.
I'm very flattered. Thank you.
So Chris, let's say that I just came to Canada as a student. My goal is to come to study. Right after I graduate, I want to get a work permit, and after that, I want to stay permanently in Canada. Now, as an international student, right, should I pay my tax?
Well, should you be paying your tax? I would say you're not paying taxes just yet, but you should be filing your tax returns in your first year. And the reason for that, first of all, welcome to Canada. Now you're a Canadian resident. By filing your tax return, one of the things you're doing to the Canadian federal government and the provincial government is that telling them that you are a resident of Canada now, right? Now, by doing that, why do you want to do this? It's because you will get some GST refund. So GST is something that you pay. It's a sales tax. It's like a VAT tax in a lot of other countries. It's a 5% added tax. Like say I bought this phone for $100, you know, I'll be paying, instead of $100, 105 because I'll be paying a GST, right? So you pay GST on almost everything, but you're getting some of it back from the government. Because you're a resident of Canada, you are entitled to that GST refund, and it can go up to something like more than $800 per year.
Actually, that's quite a bit. Now, I want to add something real quick. For GST, if you go to grocery store, if you go buy anything in Canada, usually they don't include that GST on the price tag, right? So let's say
Usually
you
don't, yeah.
So if let's say you're buying a camera, $1,000 camera, you have $1,000 cash in your pocket. When you actually go to the tilt and you talk to the store clerk, it's not going to be $1,000. It's going to be $1,050.
Well, in Alberta, yes,
Yeah.
going to be 1,050. Well, it gets a little bit complicated. So every province has a GST because that's a federal portion, and they're going to have what's called a PST. Alberta, we don't have a PST here. PST is a provincial sales tax,
Oh,
right?
okay. Yeah, I forgot
So
about
BC has, yeah, because you've been in Alberta for so long.
that. Yeah.
But places like BC or any like, as far as I know, I think every other state or every other provinces have PST tax.
Let's move back to student, right? So you're gonna get a GST refund from the government. You can go up to $800, which is a pretty nice, sizable chunk, right?
That's right.
Is there another reason you should keep up with your tax?
Also, another reason is that now if you're taking courses at the university,
Yeah.
the chances are that they're going to give you a tax form. Specifically, it's called a T2202.
Okay.
So this tax form proves that you're paying tuition at this institution and you're going to school, whether it's full-time, part-time, it's going to say on the form. So now, when you're filing this tax return, the most crucial document that you're going to bring is this T2202, assuming that you're a student. From this form, your tax preparer will calculate the amount that you can get back from the government. So that's called a non-refundable tax credit. There's a tuition amount, there's a textbook amount, and the thing is, you will have to file every year to be able to claim that amount in the future. If you went to school in 2019, you want to get that form in the beginning of 2020 from the school, and then when you're filing your 2019 tax in your 2020, you want to have that form with you.
Okay. So just to be clear,
Yeah.
that you're not getting the money right away.
Oh, right. Yes. I just want to add that what happens is when you file your tax returns using your T2202, now you have the tuition credit
Okay.
or non-refundable credit. You can't get that money back right away, but rather when you start working and you start paying income taxes, you can apply that tax credit in the future towards your income taxes paid so you can get the money back.
Oh, I see. So it's like a future money.
That's right. That's
Okay,
right.
fair enough.
Yeah.
So let's get into the second topic then. So now you finish your school, you graduated, you find your first employment. Let's say you are a store clerk. You have an employee, you're an employer. Now you're in the workforce. What are the reasons for you to do your tax now?
Well, again, congratulations. Now you're in the workforce in Canada. If you're working for a typical employer, given you're not self-employed or you're not a contractor, what's going to happen is that when you're getting your paycheck, you're also going to get your pay stubs.
Okay.
Let's say you're making $2,000, but your paycheck's not going to be $2,000.
Why not?
What happens is your employer, when they're giving you a paycheck, if they're doing the paperwork properly, they're going to be also doing payroll. So they're going to be taking your income tax out of your paycheck, CPP out of your paycheck, and EI out of your paycheck, and then they're going to submit that to the government. And also the employer will also pay a portion to match your CPP and a percentage of your EI,
Okay, so
if that makes any sense.
yeah, it kind of makes sense. So you're working, the employer pay you your salary, which is $2,000, but within that $2,000, you have to pay your income tax, you have to pay for your CPP, and you have to pay for your EI. At the same time, your employer have to match those contributions that you're paying.
That's right. So when you're an employee, you'll always be paying CPP. Almost in every cases, unless you're owner of the company or you're self-employed, there's some exceptions, but most cases when you're employed, you are paying CPP. And when you're old enough, typically people will start claiming CPP between the age of 60 to 65.
Oh, so CPP is the retirement.
It
fund.
is one of the
One
retirement
of the
funds.
ones. Okay.
Yeah, one of the major Canadian retirement funds. It depends on how much you pay in CPP over your lifetime. And then when you retire, Canadian government will pay you a monthly paycheck based on how much you've paid in your lifetime.
Okay, fair enough. So the more you contribute to your CPP, the more the Canadian government will pay you back when you're retired.
That's right. That's
Okay,
right.
so it makes sense to pay CPP. What about EI?
EI, I would say, it's type of a social benefit. And a lot of people, they are really proud of Canada because the EI, it stands for employment insurance. and it's exactly what it sounds like. It's very similar. So it's a smaller percentage. It's between 2 and 3% of your paycheck or of your income.
Yeah.
You're paying that amount, and your employer is matching not the exact same amount, but a portion of that amount, and that money goes to EI, right?
Okay.
So now, let's say you were to get laid off. Say COVID just dropped, and this happened to a lot of people. A lot of people lost their jobs, right? They had to get laid off. If you get laid off and you can't find a job anytime soon, what are you gonna do? Yeah, you have bills to pay. You gotta pay for your rent. You gotta pay for your phone, electricity, internet. So idea of the EI is that the Canadian federal government is gonna assist you during those times. So you pay into EI. When you get laid off, you can apply for a EI.
And the government will pay you.
The government will pay you a good portion of your, like what you used to get from your paycheck. Just going by rough numbers, if you're making about $2,000-$3,000 when you're employed and you go into EI, you're probably gonna get something like $1,000, $1,200 or something like that on EI.
Okay.
It really depends on like how much you paid.
It's person by
EI.
person, how much you pay into it, how long is the EI is gonna last, right?
Right, yeah. And if you claim EI too often, you might not get as much. If you haven't claimed your EI for a while, you might get a pretty monster EI. I think it really depends on the individual cases.
Okay. All right. So now that we cover this CPP and EI, so in terms of income tax, like from what I understand, Canada have what we call a progressive tax system, right? What does that mean?
I think that you're referring to the fact that, if you're making more income, then the percentage of income tax you're paying will be higher.
So the more money you make, the more tax you pay.
That's right. So let's say that you're someone who makes 7-figure income. You're probably going to be paying close to half of your income in taxes. But there's probably a lot of things like, you can set up a corporation, things to reduce your tax, right? But if you're just thinking of income taxes, you're probably paying about half of your money that you make.
Half?
Close to it.
So, okay, but
it's definitely going to be more than 40%.
Okay, but the good thing about this is if you're not making as much, then you pay way, way less.
Right, that's right. If you're making, say, 20 grand a year, which is roughly about how much people make if you're on a close to full-time job in a minimum wage, you're going to be paying probably less than about $1,000 in taxes.
Okay,
or maybe give or take.
And obviously, we want to touch on this a little bit too. As Canadians, or if you're a resident of Canada, if you classify as low-income family, you have a lot more amenity than a lot of people who makes more money than you, right? So the government is actively trying to help you get back on your feet, right? And they're using that income tax to kind of see it, justify it, right? So if you make a lot of money, you need to pay more tax to help the people who are not doing as well, practically.
That's right, yeah.
Right? So after you pay income tax, after you pay CPP, after you pay EI, right? So now your paycheck is, instead of $2,000, you get $1,700, right? What happened to the money you pay to governments?
Okay, so this is how it works. At the end of the tax year, you're gonna get a slip called T4, and this will tell you the total amount that you earned for this period, the total taxes you have paid for this period or this tax year, and the total CPP you have paid for this year, total EI you have paid for this year.
So T4 tell you practically breakdown of what you paid.
Breakdown of your, how much you made and how much you paid.
Okay.
Right? And you're gonna have to take this slip, and you're gonna have to file an income tax. You can learn how to do it. You can pay someone to do it. You can ask someone to do it. When you're doing this income tax, when you're filing this income tax, you're gonna need this slip.
Okay, so you remember you have to have your T4 before you file the tax, practically.
Right? And then when you file your taxes, whatever you overpaid in your income tax, or may have overpaid in CPP or EI, you're gonna get back. If you're underpaid, you're gonna owe the government money. But it's how they reconcile how much you owed and then how much is paid, and then
how much they owe you too.
Let's say, just because we're talking about this, let's say you're a student, right? You're a student for 4 years, you got a degree, and then now you start working. Now, because you've been paying tuition for 4 years, you have a lot of non-refundable tax credit. So for the next few years, when you're filing tax return, let's say that your yearly income was $30,000 and you pay, let's say, $3,500 in taxes. Now, a lot of that will come back to you. Maybe all of it will come back to you because you have that non-refundable tax credit from your tuition.
That makes sense.
That happens when you're filing the tax return. When you're working, they're still gonna take $300 from your paycheck. You're not gonna get $2,000, so you're gonna get $1,700. But what I'm saying is that at the end of everything, all the income taxes you paid, you get a big portion of it back because of that.
That's why you want to start doing the tax as soon as possible.
That's correct. And that's in addition to all the GST checks you're gonna get.
Wow. So you actually get paid from the government. You could get paid from the government, more likely.
That's that's right. That's right. The Canadian government, the tax system, you know, like a lot of people don't like it, but I think it's pretty neat system.
I think it's pretty fair.
It is pretty good system for the people.
Okay, so let's hit the last one, right? What happened if you're self-employed? Like, do you?
Ooh, yeah. So if you're a self-employed, now things get very complicated. You can be working as a proprietor, or you can be a partnership. You can form a partnership with someone. You can form a corporation, right? It really depends on what you're doing. Like, let's say you form a corporation, it gets really complicated. But basically, you're gonna have to start doing your own bookkeeping. Nobody's gonna be able to take a portion of your paycheck and then pay to the government for taxes. So that's something that you're gonna have to do yourself. I can't really explain in just a few minutes because it gets really complicated. Basically, you're doing the calculation of how much income or how much revenue you're making versus what expenses you can claim, and doing the bookkeeping, and then
so let me get
letting
this
the government know.
Let me get this right. So when you're an employee, right, the employer do all the calculation for you.
Yeah, they're required to do that.
So now that you're self-employed, instead of having an employer do it for you, you have to do it yourself. That's where the complication come in.
That's right.
Okay, that makes sense.
Even if you're a contractor, let's say you get a contractor payment. If they say, oh, this is a $5,000 job, they're gonna give you $5,000 check. Oh, they're gonna also give you a GST. It gets really complicated, and you're gonna have to do GST return. You're gonna have to do your own income taxes. Long story short, when you're self-employed, I would say it's good to plan ahead in how much taxes you're gonna owe, and put that aside, because you don't want to be hit with a $20,000 bill at the end of the year and then have zero money. You don't want to be in that kind of situation. So it gets pretty complicated, and a lot of people at that stage, especially if they're making good income, they will hire an accountant or have someone to help them with the bookkeeping. Yeah, it just gets complicated. And if you're starting your own company, even more complicated, right?
Yep. Yeah. We can attest to that. Okay, guys. So if you guys have any question, if you guys are more curious about being a self-employed, what kind of tax system do you need to know? If you want us to get into details, leave a comment down below. Let us know, right? I'll have Chris come back on the channel. Chris is a good friend of mine. He will always be able to answer tax question practically. But for now, thanks for watching, and I'll see you guys around. Hey guys, I hope you guys learned how to claim your tax credit and GST refund. If you do, click the subscribe button, smash that like, and don't forget to comment down below so we know what you guys like. And as always, I'll see you guys around in the Great White North. Bye.